Elon Musk, Jensen Huang, and Tim Cook, what do they all have in common? They're all billionaires, but how did they get their billions of dollars? It's probably not what you think, and it's not from their salaries. So how did they get this money? What did they do? Where did it come from? So they made their billions from a thing called performance-based stock options, and basically what that means is they are paid based on what the stock price is going to do. So then you're going to say, well, if they're billionaires, how do I capitalize on this same options trading strategy that they do? That's what I'm going to break down in this video right here. And a lot of you guys are probably going to say, well, is this possible for regular guys like us to do this? Is it possible for us to scale to millions of dollars just like they did? The answer is yes. Just look at my Charles Schwab trading account right here. I started this account roughly 5 years ago with nothing. Now I'm almost at $1 million in this account right here. Check out my 1 year return, 95%. 2-year return right here, 169%. So this is possible to do. You just have to understand what the CEOs are doing, how they're thinking, and what they're actually trying to do with the company. And then you make stock options trades based on that. And in just a couple minutes, I'm going to show you inside this account right here for a trade that I just made that could make me a couple $100,000. I'm going to show you into it, why I did it, how you could do it right now in your portfolio. So let's break it down. Let's break down how they made their billions, how you could scale that to millions in your account too, maybe even billions in the long run. So here we go. So the current price of Apple right now is $244 per share. So the board of Apple and Tim Cook himself, they vote on what Tim Cook's salary should be, his full compensation package. So what they want to do is everybody wants the share price to go up. The CEO wants the share price to go up. The board wants the share price to go up. All the shareholders obviously want the share price to go up. So what do? The person that's the CEO of the company, they are the one that guides the company into the future. They want to boost their earnings, they want to boost their revenue, they want to run a company a little bit more efficient, and they want to push new products that make people want to buy it so they make more money. They want to have that competitive advantage going forward forever, essentially. So what do? They tell the CEO, if you make Apple stock, for example, hit $300 per share in the next couple years, we're then going to give you a bunch of free call options that you could go exercise. Now, if the share price of Apple doesn't go over $300 per share by the time frame that the contract expires, Tim Cook makes no money. The share price has to go above $300 per share for Tim to make money. So just think about it. What is everyone incentivized to do? They're going to do whatever they can to boost the earnings per share of the company. Because as you guys know, earnings are the number one thing that boosts the share price in the long run. So Tim's going to try to raise revenue. He's going to push new products. He's going to make a better iPhone. He's going to push whatever product he can do to boost the top line and boost the bottom line to boost the share price. And just a little fun fact about this too, just so I could show you that this is actually what's happening, look at the dividend yield right here on Apple. It's 0.4%. It's super low. Historically, Apple has yielded much higher than that for the dividend yield. But here's the reason why. It's all a scam that Wall Street is doing to you right now. They want you to buy these dividend stocks, but they're not really telling you why dividends aren't going to be good going into the future. This is why. So when a company like Apple has extra money laying around, and believe it or not, a lot of these companies do have extra money laying around, they have a duty to return that capital to the shareholders. They'll either pay a dividend or they'll repurchase the shares. But here's the kicker with it. Tim Cook wants the share price to go up. The board wants the share price to go up. All the people that hold the shares, they want the share price to go up. So if they pay you a dividend, they're just going to send that money out of the cash balance in the bank account of Apple, and then it goes into your bank account right there. So technically, when you pay a dividend, the value of Apple goes down by the amount of the dividend payout. But they don't do that. That's why the dividend yield is so low. Instead, what they do is they repurchase their shares. Let's just say that Apple repurchases 10% of the entire shares outstanding. They buy them, then they pretty much delete them. So now all of Apple's profits, they're then going to be divided through 10% less shares. That's going to be more earnings per share of every single share. That's going to boost earnings per share. That's going to boost the share price. Another reason why they like to do this is because of tax efficiencies. You don't have to pay taxes on unrealized capital gains. So when the share price of Apple goes from 244 to 300, you're not paying taxes until you sell. But if they pay you that money in a dividend, you pay taxes on dividends when you realize it and when you get the payment. So that's why it's super important to understand the incentive structure of all these CEOs. They want to boost revenue, boost earnings per share, make the share price go up. They want to make their performance-based stock options go in the money so that they could walk away with a crap ton of money. Everyone's happy. The CEO's happy, the shareholders are happy, the board is happy. So when you know this little piece of information right here, we could then formulate an options trading strategy around this to capitalize on what everyone is trying to do, to capitalize on what Elon wants to do, what Jensen Huang of NVIDIA wants to do. All these CEOs, they want to boost the share price of their company. So let's break it down a little bit. So my option trading strategy, I've scaled to millions of dollars in just a short amount of time, and I average roughly $30,000 per month in option premiums. Now, it's not hard what I do with my strategy. The key is you just have to know how to value companies, know when they're trading below intrinsic value, and know if they have a durable competitive advantage going forward. If they have those things right there, I promise you will make a crap ton of money in the stock market. If you don't feel comfortable doing that stuff, do my course below to walk you through step by step exactly how to do that stuff. But let's go into it right here, and I'm going to start off with an example. So let me ask you a question real quick. If we go to NVIDIA's CEO, which is Jensen Huang, and you say, Jensen, I want to buy call options on NVIDIA, but I'm only going to buy a 1-month call option on it. Can you make the company go up in share price in 1 month? He's going to say, dude, I can't make the entire company of NVIDIA worth a lot more 1 month to the next month after that. It's not possible to do it in such a short time frame. But if you were to say, Jensen, can you do it in 1 year? Can you make NVIDIA a little bit more profitable, a little bit more top line growth in 1 year? At that point, he's going to go scratch his head and say, yeah, I could totally do that in 1 year, but in 1 month, there's no way. So that's why when you choose expiration dates when you do stock options, you need to do what all the CEOs do. You need to do what the big money is doing. You're not seeing Elon and Jensen and Tim Cook getting like 1 month call options. The board is not going to them and saying, hey, we want you to boost the share price, but you only have 1 month to do it. They say you have 1 or 2 years, sometimes even 3 years for these call options that they get to boost the share price. It's not realistic to do it in 1 month. So if that's how the CEOs are being compensated of these companies, why are you not aligning your interests with their interest rate there too to try to capitalize on the same move that they're trying to do? So we're going to go into my Charles Schwab account right here. I'm going to show you a trade that I actually just did on NVIDIA, and I'm going to explain to you why I did it and why I chose the expiration date that I did. A lot of people are going to say, dude, why did you go so far out on your expiration date? And it's all going to come back full circle here in just a second. So let's dive in. All right, so I'm going to put myself up top here so I'm not in the way. So this is currently how I have some of my portfolio right here based on allocation. And keep in mind, this is only how I have it at the time of recording. I change this stuff up all the time. But let's look at this trade that I made right here. So I bought call options on NVIDIA. I have a 125 strike price and I bought 10 contracts. So right now you can see I'm up $10,000 on that call contract right there. I bought this right after the DeepSeek stuff happened. I bought when there was fear in the market. There was a lot of fear around DeepSeek, and honestly it was possible that could have played out to be a big problem for NVIDIA. But when you really understand these companies, you know how to value them, you know what they're actually trying to do in the long run, you will understand that that will in the long run end up being one of the best dip buying opportunities you'll ever see. So that's what I did. I bought some calls on NVIDIA, and I also sold some puts on NVIDIA too. I collected $21,000 in premium right here, and I took this $21,000 right here, and then I went and bought some call options on NVIDIA. I'm up $10,000, so I paid roughly $38,000 for this, but basically $21,000 of that was free money. In just a second, I'll go through this trade right here just so you guys understand it, but I really want to focus on this trade right here. So I chose the 125 strike price for 1/15 of 2027. So you're going to say, dude, that's 2 years out from right now. Why are you going so far down the line on this call option? Think about it. What is Jensen trying to do at NVIDIA? What does the board want him to do? Boost revenue, boost earnings per share, do whatever you can to make the share price go up. If you raise the earnings, if you make NVIDIA more of a dominant factor going forward, the share price is probably going to follow. If I would have bought a 1 month call option on it, it's probably not going to happen. It's hard to know what's going to happen in 1 month on NVIDIA. And obviously once NVIDIA dipped, I did go into these call options pretty hard on it, but I'm doing that with the mindset that I'm going to hold this for a while. I feel like NVIDIA in 2 years from right now is going to be over $300 per share. I could be wrong, but that is the bet that I'm going to make. But guess what? If NVIDIA is over $300 per share by the date right here, this contract is going to be worth $300,000. And this is why. And this is why the CEOs keep getting rich. I have 10 contracts right here. Every option contract is 100 shares. So 100 shares times 10 contracts is 1,000 shares. If you have 1,000 shares at $300 per share, do the math, $300,000. I bought this option contract right here for $37,000. So in theory, my profit would be $300K minus $37,000. Now, is it going to go to $300 for sure? I'm not 100% sure that it's going to go to $300 per share, but I do feel super confident. I read through every single line of these financial statements. I understand these companies on a deep level. I feel confident that NVIDIA is going to be much higher in 2 years from right now than what it's at right now. Nothing is guaranteed, but when you have confidence in your plays, and when I have confidence in my plays, I go hard. I make less trades, but I make bigger trades when I make the trades. So this month alone, I generated roughly like $54,000 in option premium. Another trade that I did was right here. I sold the put on NVIDIA. So what this is saying right here is I have to buy NVIDIA shares for $100 per share anytime between now and 6/18 of 2026. Is NVIDIA going to fall to $100 per share in that time frame right there? It's possible, but guess what? If it does, I'm okay with that because I'm fine buying it for $100 per share. If I initiated these trades, I feel like it's already cheap at the current price. I mean, just look at NVIDIA right now, $138 per share. If I think it's cheap at $138, why would I not want to buy it for $100 per share? And on top of that, I got paid $14.39 in premium. That's premium per share. So my effective cost basis, if I get assigned shares of NVIDIA, is going to be $100 per share minus $14.39 per share. That is my break-even price. So roughly $86 per share. Do you want to buy NVIDIA for $86 per share a year and a half from right now? Just think about it again. What does Jensen, what does he want the company of NVIDIA to do? In a year and a half, can he boost the revenue? Probably. Can he boost the earnings per share? Probably. Is Blackwell going to be scaling in that time frame right there? Is CUDA, which is basically the iOS of the NVIDIA AI chip, is the iOS of NVIDIA going to be much better, more useful, and easier to integrate in your company a year and a half from right now? Yes, that's just going to drive demand for the NVIDIA products. So when I have confidence in a play, I go pretty hard into it. But keep in mind, this is only 5% of my portfolio right here. But if it keeps going up, this will continue to be a larger part of my portfolio right here. So I do a lot with stock options, and you could honestly make a crap ton of money with stock options, but the longer game is where the money's at. Of course, I do a bunch of short duration plays, but they're smaller plays, but the big plays where I make the majority of my money is going to be the longer duration options. But you have to understand, like I said, how to value a company, how to feel confident doing it, how to eliminate all the emotions out of your investing. If the market goes down, how to understand how to capitalize on the emotion of the humans in the stock market, and how to make money doing that. If you don't feel confident doing that stuff, you're not going to make money doing what I'm saying. If you happen to just go follow me on this trade right here, but NVIDIA happens to fall 5% tomorrow, you're going to freak out and probably sell because you didn't do the homework. You don't understand how the trade actually plays out. You don't understand the company. You don't have conviction. If you want to have conviction and confidence in your plays, do my course below. I promise you it's going to help you guys out a lot. Hundreds of people have went through it. It's changed so many lives. People are scaling their portfolios right now, thousands of dollars per month in option cash flow. People are hitting $1 million marks all the time with my strategy. So if you want to check that out, click the link below. If you don't want to do that, watch this video right here. It's me going a little bit more in detail on selling put options because that's how I get a lot of cash flow. I'll see you guys in that one.